Well, one of the things that I pride the lunch bunch on is we start on time and we end on time. So, good morning to everyone who has joined us thus far. And it's still a cold day in Athens, Georgia. So I was hoping for a little bit more warmth, but hopefully when we meet in March, we'll have that just spring is coming feeling. Our speaker today, as many of you may know, is Bonnie Waring, and she is going to talk to us about financial matters. And so, Bonnie, I'm just going to turn it over to you, and you can tell people how you want to handle questions, whether you want them in the chat and or at the end. So, you have talk away.
Okay, excellent, excellent. Okay, guys, thank you so very much for attending today. I know that you all always do. I hope I'll be able to be on with you quite from this point forward as well. I am a recent retiree of assistant principal from Lovejoy High School as well as being an educator for 32 years, but I've been doing financial services for over 30 years as well. So I'm very excited that you all are on today. So how we're going to move forward today is I'm going to show my screen shortly, a little presentation that I have on mortgage protection and debt-free life. I will ask a question or two throughout the presentation. However, if you could save your questions for the end, I'm going to save time for questions, and then we can. And also, I'm going to give information in the beginning. My information, my phone number, my email, my website, and I have a form that you can fill out if you would like to get in touch with me for more personal questions. I have a link to the form. I also have a QR code to the form. So I want to show that in the beginning so that you can see the form as we're talking, because some of the things that we talk about, there's a checkoff on the form that you'll say, oh yeah, I want questions, but I have questions about that. I have questions about that. So that's how we're going to operate. I'm not going to belabor the point. I'll get started and make sure that I save room for questions at the end. So let's go here. And guys, please excuse me. I have a brand new computer and it's super sensitive. You can just hover over and it's going to get there. So if I move too quickly, I'll just take it right back. Okay. So let's get started here. Okay, so our presentation today, again, is going to be on mortgage protection and debt-free life. Just to let you know, I work with all types of financial services, and you will get to see a little bit of that as we talk today. Again, I am the owner and operator of Waring Financial Services. I am a broker. I've been in the financial services business for over 30 years, but I'm just like you all. I still say I'm an educator, but I am a former public school educator of 32 years. Again, just retired in July from right here in the Jonesboro area. I've been helping families in the area of financial services, again, for over 30 years. And one of the main reasons I started working with financial services was to help educate our community on becoming debt-free and building generational wealth and making sure that we save our homes, that we're protected, our income's protected, our life is protected, our grandchildren and children are protected. That was kind of a ministry for me. And it's really been great. I've been able to take my ministry and turn it into a business. And just to let you all know, if case any of you are interested in a little side business or another business to work in your retirement, or if you have neighbors or friends who are looking for work, we are definitely hiring. I want to throw that nugget out there. I will able to help you become independent agents. We work with over 43 companies you've heard of, like Mutual of Omaha, Foresters, Transamerica, Inc. So no small time companies, definitely major companies that we work with. So we are looking for to help people get their license and get them trained. Just wanted to throw all of that out there as well. Here's my contact information. The appointment form can be found at https:// bit.ly/tinyurl.com/meet Dr. Bonnie. Or you can go ahead and put your camera up to that QR code and go ahead and let it come up. If you could you can also take a picture of that QR code and come back to it later. That's my website, waringfinancialservices.com. My email, bonnievir2@gmail.com, and my phone number, 678-267-0230. I'll put that back up for you again at the end. However, again, I like to start out with it. So at the end, if we're rushing, you making sure you can get it, and you won't have to worry about that at the end. So I'll stay right there for a moment while I give you some point and purpose of what our two topics for today. Again, our two topics are mortgage protection and debt-free life. And you know that many people have beautiful homes, or even they pay rent to great apartments or great condos, but don't necessarily have a plan in place in case they would pass away too soon. If you passed away too soon, are you sure that your family would be able to stay in that home? Are you sure that they would be able to make the mortgage? Are you sure, even if they decide you all were going to sell in the long run, are you sure that they would have time to sell? Could they pay the mortgage for the next 6 months or 8 months or a year while they get the home together for selling? If not, if there are no funds in place for that, then you could lose the equity in your home. If you've paid on your home for 10 years, 15, 20 years, and have excellent equity in the home, but you didn't have time to make those mortgage payments over the next 2 and 3 months when the breadwinner passes away, you could lose it all. You could lose the home, the equity in the home, and the family might not have anywhere to stay. So the goal is have a plan. If you don't have a plan, then that is one of the reasons I'm here today. And then the next thing is, if you owe 10 years, 15 years, 20 years, or 30 years on your mortgage, would you like to pay that mortgage and all your other debt off in 9 years or less? Or at least 1/3 of the time? Well, we have a plan that we are so proud of that people have been doing for many years, but most of us just didn't know anything about it, that we can help you pay those debts off early, okay? So I stayed there for a little while so you'd have a chance to get that information. And don't forget, we can come back to it. So guys, again, we're all educators. So I know how we are. I know what our benefits package looks like. I know what our benefit package looked like when we were still working on the job. And I know what our benefit package looks like. I know about all those great individuals like me now, right, that come into the school, helping us with our 403Bs, our retirement plans, our life insurances, and I know how we sit down and talk to them, which means we're the kind of people that want to have secure homes, secure life, nice things for our kids, nice homes, great vacation. And you know, we retired to have great vacations, right? So we want all these things that we took the time to do. We took the time to put in place. But what if? What if you pass away too soon? What if you get some type of chronic illness or critical illness and you still live, but you don't have quite the income coming in that you used to? Now, I know we're retired, but maybe we have a spouse that still works. And maybe that spouse gets some type of chronic or critical illness and cannot bring that same income home. Do you have children in college? Do you have goals that you still have not met yet? For example, is that house still not paid off? What if? So I tell people, let's look at it like this. If you have a piece of paper, draw a circle in the middle of your paper. And think about the monthly debts you have. Write those large monthly debts in the center of the circle. Is it the mortgage or the rent, the car, maybe a college loan, or maybe your children are in college and you pay something monthly? Is it a major loan? Is it a second mortgage? 2 cars? Whatever it is, put those large debts in the center. And on the top left side, today we all get to be as skinny as we want to be. So I want you to draw a stick figure of yourself and write your monthly bring home income under your stick figure of yourself. And if you have a spouse, significant other, or someone who lives with you and pays half the bills, put that stick figure person on the right side at the top and put their monthly income that they bring home under that stick figure. So again, we get to be as thin as we want today because we're going to be stick figure. For once, it's good that you can draw stick figures, right? So now, here's what I want you to do. I want you to put an X over yourself. The stick figure of yourself, put an X over it. And unfortunately, that represents you not coming home. You not bringing that income home. Now for you, you might have a retired income. You might want to put that X over your spouse if they're still working. Now, because you're retired, your income would still come home to your beneficiary. So we're fortunate of that. But maybe you work another job. Maybe you bring home some other income. But maybe your spouse is the one that we have to be concerned about that income not coming home. Once one of those incomes are lost, would your family be able to still pay all of those large debts, pay all of those debts, keep the home, keep the college fund going? Maybe they can, because maybe you've planned well. Maybe it's just you. However, would the people that you leave behind be able to keep your home? Or would it be best for you to have a plan to say, let me take some of these large debts off of them. Let me take the worry from them. Let me have a plan in place, or do I have a plan in place that would allow them to get the big bills paid, or at least stay in this home? So that's kind of where I wanted your mindset to be. That whole, now we all know, unfortunately, we're not going to live forever. We know that's a part, I taught biology, taught about lifespan, right? So we all know we got here. And at some point after our job is done, whatever we were meant to do, right? We got to take our portal out. And that's what we want to make sure. We're planners. We lesson plan. We make plans. So therefore, we want to make sure that we have a plan in place that our families can stay in our homes and that we build generational wealth and even become debt free. So do you have a plan for that unexpected? Okay. My role and purpose. So just so you know, kind of what do I do on a daily basis? I have drawn on my screen. I see a red line, but we're going to move on anyway. My role and purpose is to design solutions for families. And today, even though I'm talking about mortgage protection and debt-free life, that means paying your debts off early, including your mortgage, and building generational wealth. Even though those are the two things that I'm talking about, I help people in all the areas of financial services. I can help you with income protection, critical illness, whatever you need in those areas. I can help build a plan for you, or I can do a review of your plan. I don't charge a fee. Okay, so I represent over 43 companies, actually. I use their products and services to build and design plans for you. And if within those 43 companies, there is not a solution that I need for you, I do have access to another 40-some companies that I can indirectly use to build and design a plan for you. It's all about you. It's not about me. It's about, do I have a plan in place? Okay, so that's who I am, and that's my role and purpose. So understanding concerns, so on your paper, the question one I have for you, when you think about making sure you have all of your plans in place, keeping your family in the home, guess what, guys? Even if you don't live with anybody in your home, but you've taken 10, 15, and 20 years to put money into the home, you want somebody you love to get that home. You don't want it to just be lost and let the bank take it back. because someone in your family could benefit from the equity that you put into that home. So I just want to say to those of you who say, hey, I live by myself, I don't necessarily have any children, I'm not really worried about it. But you took the time to pay that mortgage, you have that equity built up, you don't want to, just throw that money away. That money could go to something of your choice, charity of your choice, nieces, nephews, people that you love. So what is your main concern in terms of putting some type of protection in place for your family? If your spouse or you were to pass away, what would that look like from that standpoint? So question number one, what's your main concern? Question number two, what do you want it to look like? If you don't know, that's something for you and your spouse or you and your children to talk about. Do you know what it's going to look like? We don't want to wait until it's chaos time. That's not the time to have that discussion. That discussion we need to know now. I want you to stay in the house. I want you all to keep the home. I want you all to pass the home, keep it. My dream is that my family will make our home a generational home, that they'll always, even if no one wants to live in it for, ever, it can be the place where they gather, come back to. In this day and age, maybe they're Airbnb it out if they don't want to live there, right? But then when it's time for the family to come back together, they have a generational home. But more importantly, maybe there's someone in the family going through a thing at a certain time in their life they can't afford where they're living right now. Maybe we can be a stopping ground. So that would be a reason for me to keep the house in the family. And also, I have some children with some disabilities. So therefore, I would always love to have a place where they can call home no matter what's going on. So that would be kind of my answer to number two. And number three, would you want to stay in the home if something happened to your spouse? Would you want your spouse and children to stay in the home? If you want to stay in the home, can you afford to? And if you have to move out, will you have enough income, or will your beneficiaries that you leave behind have enough income to sustain the months they need to live there while they make the plan to sell or get it together? All those things is what we would like for you to think about. Okay. So 7 out of 10 households rely on two incomes. 51% of foreclosures are caused by death and disability. 50% of men and 33% of women will develop cancer in their lifetime. The average funeral cost is over $10,000. Let me give you some advice though. Don't pay over $10,000. Okay. Also, here's a quick piece. This is a gold nugget I'm going to give you right here. Typically, when someone passes away in your family, and if you have an insurance policy, the funeral director will come to you and say, don't worry about a thing. I'll handle everything for you. Just pass your policy over to us and we'll handle everything. Don't do it. Do not give them your policy, because they will spend so much more than you need to spend. From years in the past, we thought we had to hand the policies over to them and they give us the change. No, that is not the law. You decide what tell your family what they should spend, or if you're the one planning, if you have $100,000 policy, I'm only going to spend $10,000, or if you want to spend $20,000, that's great, but decide on what you're going to spend, and that's all you tell them you have. Hey, I have $15,000 to spend. Whatever we're going to do, we got to do it within this budget. And what they will do is you say, here's the name of my insurance company, and here is the phone number. They will write out a receipt. You will sign a form. They will fax that form into your insurance company. Your insurance company will approve the amount they spend. So if you all agree to spend 15, the insurance company only has the right to say, yes, he has 15, or no, he does not have 15. But if you give them the policy and they know you have 50,000 or 80,000, they're going to spend about 30. So that's a gold nugget, free. I didn't charge you anything for that information, but it'll change your family's destiny. Now, guys, here's one thing. When I do these seminars and presentations, it is not just for you. Please, any information you learn today, tell your sisters, your brothers, your children, nieces, nephews. This is generational stuff. Please share. Now, 37% of Americans' households have nothing saved for retirement. We know that you all had some things saved for retirement because guess what? We're at a retirement luncheon, right? But that's just a statistic that I do share with other people. Now, I am in a position to help people build these mortgage protection plans, debt elimination plans by using all of these resources that I have at my hands: mortgage protection, universal life, term, family, all these types of things. So here's a quick review before we move into the main two. With group insurance. Now, I know you all are good because you're retired, but you have other family members. Group insurance is what you have when you're working. Group life insurance. Group life insurance is on somebody's job. It's great insurance, but it doesn't pay off most of the time because typically people do not pass away on the job. They took to get sick and then they are home and then the bill is not being paid. And then when they pass away, that's why the insurance doesn't pay off. If you have any family members who only have group insurance, that is only icing. I tell them they need a cake. They got to have their own policy. Okay. Group insurance is icing. I'm not talking about our wonderful health insurance. I was speaking about that life insurance. So that's a tip for you. Now, term insurance. Guys, in case you have a term policy that you own on your own, term insurance is great. A lot of people think it's not. It's great, but you got to know what to do with it and what your purpose is, right? So term insurance is just for a set period of time, 10 years, 5 years, 15. And we actually write mortgage protection insurance on term policies. Whole life is cash value insurance. That's called permanent insurance. It lasts to age 100. We do have some new policies that last to about age 120. And these policies are what people use to build value, build cash, college funds, retirement accounts. But you really have to know how to use them for it to build compounded interest, great wealth. This is what we use to help build our debt freedom program and our debt elimination program. Income protection. Income protection, of course, if you are something would happen to you and you are alive, we call that disability insurance. It could be critical illness, heart attack, stroke, cancer policies. Income protection is in death. Income protection in death is called life insurance. Now, mortgage protection. What is it? If you purchase a policy, which is a type of life insurance policy, in this case, we typically use term. You get a life insurance policy for a period of time, 30 years if you have a 30-year mortgage, 15 if you got 15 years left. I typically can give people 15 and 20-year policies because I'm going to come right back and help you pay your house off early. So you got a 30-year mortgage, I help you pay it off in 10 years. So I might write you a 15-year mortgage protection policy. But it's for a period of time that protects your mortgage. And if you pass away too soon or someone in your family passes away too soon, then it'll pay off so your family can either pay full mortgage, partial half mortgage, or partial mortgage, or what I call critical period. It's typically for those of us who may be in our 60s and 70s and 80s, we tend to have to get critical period. I'll tell you about that. Why do you need mortgage protection? Every 17 minutes, someone buys mortgage protection and will not live to pay the second premium. 98% of Americans do not have a plan in place to pay off the mortgage. The spouse, the mortgage, the mortgage protection will pay your spouse or your co-borrower or your beneficiary in case you pass away too soon. If you don't have the earning potential to keep paying that mortgage, then that's what the mortgage protection insurance is for. With mortgage protection, you do not leave your home to chance, you leave your home to your family. You got to know your options for mortgage protection though. You can have a full mortgage payoff. Okay, so if you owe $200,000, you can try to get $200,000 worth of mortgage protection. Typical companies tend to give you a decreasing term. Now, here is the lesson for today. If you're going to pay $80 a month or $90 a month or $50 a month or whatever yours costs for $200,000 worth of coverage at first, then you want to keep, you still paying the same premium every month. Well, you should have the same amount of coverage, not let it decrease with the amount of the house. So one thing that we like to do for you is whatever, if you end up getting a mortgage protection plan, let the mortgage protection plan stay level. So if you pay your mortgage all the way down to $15,000, you still get the $200,000 because you paid the same premium. Why not have the same benefit? So one lesson from today is you want to keep the term level for your mortgage protection. You can get a partial payoff. Let's say you cannot afford to get a full payoff. Let's say you was $200,000, you could not afford that. Maybe we'd get $100,000. And then finally, you all know that insurance is based on age, weight, height, medical conditions, all those things. So maybe let's say I can't really afford to get, or my health doesn't allow me to get any massive amount of coverage. Then what we do is called equity protection. You get a plan in place that will help you not lose that beneficiary, not lose that home. So do we need 6 months of payments, 1 year of payments, 2 years of payments, 5 years of payments? Let's say children are 18, 16, 17, and 18. Maybe we can put enough payments in place until the kids graduate from college. So that's the kind of options that you have with mortgage protection. So again, full mortgage payoff is kind of harder to qualify for it. Older we get, we may have health issues. Therefore, we might have to go with option 2, that partial payoff that we talked about. It's a more affordable option. And then that option 3 that I was speaking of, and you might want to write this down. Option 3 is to protect the equity, and it's called critical period. So why is it critical period? Again, it gives you time to think. It gives you time to grieve. It gives you time to get yourself together. It gives you time to say, look, hey guys, I put in place for you 6 months or 2 years worth of mortgage payments. I couldn't afford the whole payoff. But now 2 years should give you all a time to reposition your life. It should give you all time to say, we got to get an extra job, or we're going to sell the house, or we're going to Airbnb the house out. Whatever it is, it gives you time to think. That's what equity protection and critical period is all about. So a lot of time, now let me tell you guys, I talked to so many people who don't have mortgage protection because they couldn't afford it. But nobody ever told them about option 3, where they could get maybe $25,000 worth or $15,000 worth or just $10,000 worth, that we could protect the equity and give time to salvage the equity, the money, the home. Okay, so again, knowing your options is critical. Critical period could give you 6, 12, 8. I even just did someone last night, and they couldn't afford the whole thing, but I gave the spouse is 70 years old. I was able to give them enough to get the spouse to age 90. They can't pay because they bought a brand new home. They're excited, but it will be enough protection to pay the mortgage until the spouse is 90 years old. Now, I think that's amazing. So therefore, the children can have all of that amount of time to figure out how they can help mom at age 90 at that point. So that gives, and then as long as I'm around, I'll stay with them and help them plan and talk through it, and make a plan. That's what I do for my clientele. I'm with you, help you with your financial thoughts and all those things. I don't charge you anything, just help you. So the most popular plans for 65-year-olds and above is equity protection critical period. All right. So knowing that when you put a mortgage protection plan in place, you will definitely have the death benefit that goes to your beneficiary, right? And option 2 is some plans have living benefits attached to them. So that means if you have a heart attack, stroke, or cancer, it'll give you a lump sum of the payment to live on. Again, most of us here, we're retired, we have an income, but let's say your spouse or someone who has to help take care of you, they work, but you need assistance. So maybe that caretaker has to take off of their job for a month or 2 months to help you. Well, the living benefits that could be attached to your policy could give 25% of the policy up front, like $25,000 or $30,000. So now if you got $30,000, that caretaker can take off their job and not worry if they can feed the family for taking off the job. Or you might work, a lot of us retired, but we still work a little something on the side, right? So maybe you can't do your little something on the side, then you can use your money from your living benefit. Also, if you don't even need a mortgage protection plan, I do have some living benefit critical illness policies separate that you could put in place: cancer policy, heart attack, stroke, something like that. And then some of our plans have return of premium. If you get it on a term, at the end of the term, you can get most of the premium back that you paid. And some of our plans have other savings plans attached to them. So that is mortgage protection. And so I'm going to move, I'll save all the questions for the end. I'll just go ahead and move forward to the debt-free life. Okay. So now we talked about mortgage protection, real review. You know, we're educators, right? Let's do a real review real quick. We talked about there are lots of kinds of insurances, but what we do is we can use those types of insurances to build solutions. The main topic of solution I just went over is protecting your mortgage. So if you have a home and you don't have to have a mortgage, you're paying rent at a place, they need the rent. So the mortgage protection is not attached to the mortgage, it's attached to your life. So I can write it on you, whether you have an apartment or whether you have a condo or whether you have a house, right? And then you get that mortgage protection so that your beneficiaries or your children or your spouse or your co-borrower or your family can ensure they have somewhere to live if something would happen to you or your spouse or your co-borrower. And that you can use that money not only to pay the mortgage and the rent, but use it to do other things as well. So that was our first topic. Our second topic is the debt-free life, paying your mortgage and your debt off early. Now, guys, we have a debt epidemic, and you know it's worse since COVID. These numbers were probably put out during COVID, and the numbers have gotten worse. I'm not going to go over each number, but you all know our debt's in the trillions, right? But using insurances to help build wealth is not a new thing. Now, I wanted to put up here some individuals who did that, so you wouldn't think I'm talking about something that's new and risky, okay? Walt Disney built Disney using the concept of debt-free life, using the concept of infinite banking, using insurance to save money, grow compounded interest, and have money to do things. He used his insurance products to build wealth so he could pay his payroll to his employees. Doris Christopher, she started Pampered Chef. She got her money out of her insurance policy to start Pampered Chef. So that means she grew money in the insurance policy, let it grow compound interest, and she started Pampered Chef. Ray Kroc, the guy who started McDonald's, he used money from the insurance policy. He grew it compounded interest in the insurance policy. He started McDonald's that way and was able to pay his payroll and took loans against his insurance policies to build wealth. And guess what? Warren Buffett, he owns Geico, Wells Fargo. Everybody's heard that name. That's how he does business. He puts his money in insurance policies. It grows compounded interest. He uses that to leverage his money. He leverages it, grows compounded interest, gets the money from the insurance company, and buys big business. So I want to let you know, and this, most of us live in subdivisions. This is how contractors get their money for subdivisions. So the goal is, if you have money, don't just spend it. If you spend the money, it's gone. You want to have money and put it in vehicles that will let you use your money more than one time. The goal is to be able to use your money 7 times. The bank uses your money 7 times. You put it in there and they invest it and they do other stuff with it, then they give you a tiny percent, not even 1%. But what you want to do is put your money in vehicles that will give you 6%, 7%, 8%, 9%, 10% on your money, right? And your money is able to grow and grow compoundedly. And then you utilize the bank's money, in this case, insurance company banks, to pay off your debts while they allow you to grow money in their system. And that's what these guys did. So you want to harness the power of life insurance, and you can do that. Most people don't know it. So remember, my goal is to teach you how to use our vehicles better. Life insurance is not new. We got a lot of life insurance. We have some on the job. The people came there, and so I let so many, as the assistant principal, I let so many agents come in and talk to you all, right? They came in the break room and talked to you, and you got MetLife and all those great people, right? And you signed up for those policies. So we know life insurances are not a new thing. However, it's not just for death. Life insurance can build you wealth. It is a vehicle if you know how to use it. So you want to harness the power of life insurance. You want to redirect inefficient used dollars in your budget. So if we can find some extra $50 here and $20 there and $30 there, we can take it and add it together and pay your debts off early or grow money for wealth. We allow your policy's cash value to grow. It's guaranteed. It doesn't rise and fall with the market. You borrow from your policy's cash value with no penalties at all. You pay off your debts in 9 years or less. So I said, let's say you don't have 9 years on your mortgage. It's really about 1/3 of the time. So if you got a 9-year mortgage, I can help you pay it off in like 3 or 4 years. If we got 15 years left, we can probably get it down to 5 years. Okay, if you got 30 years, we can get it down to the 10. I have my assistant principal at the school I just left. She told me I can tell this. So I don't tell people's business, but she said, tell every educator you know you did this for me. She had 27 years left on her mortgage. We came in and looked at our budget. We found some money that we could reposition. So now we're saving money into a plan like this. We will be paying off all her debt, her house, her cars, her loans, her everything in 10.5 years. So she said, tell every educator you know. Okay, so that's why I'm telling you. You can repay, so they will be little loans from the life insurance, but you'll, instead at a bank, you might get a loan at 10%. With the life insurance company, they give you loans at like 3 or 4%, but you're earning 10%, so you net about 6%. Interest compounded growing on your money. And if you know how to use that and understand that, it can grow you a lot of wealth. And I'm not expecting you to 100, let's see, as a teacher would do, right? Not expecting you to 100% get that today. I'm just trying to wet your whistle, spark an interest. So you say, hey, Bonnie, I don't understand that. Can you come and tell me about that some more? I'm interested. That's what that's about. You can go to my website and you can read about it as well. It's called Debt-Free Life. Okay. So debt-free life plans also reduce the interest you pay to your lenders. It eliminates all your debt in 9 years or less. Maybe I might get you down to 10.5 years or 11 years. I got another lady this last week. She had 30 years left because she just refinanced. Because of the amount of money I found in her budget to help power her system, I got her down to 14 years. It wasn't 9 years, but it's from 30 to 14. I don't think she's, she was going to be paying 30. Now, at the end of the 30 years, she would have had a paid off house. But at the end of the 30 years, now she'll have a paid off house and $500,000 in cash because of all the interest saved and the compound interest grown. So we can improve your cash flow for more retirement money, for generational wealth, for investments, okay? And this plan can allow you to retire with tax favored income. All right, so here's an example. We're gonna go through this example, then we're gonna tidy it all up and leave room for questions, okay? So we have Mark and Joyce. Mark and Joyce are a very typical client for us. Mark and Joyce were age 37 and age 35. Their desired retirement age was age 65. Now, I know most of us are at retirement. Don't let that scare you. This is just an example. I build solutions for everybody. Their monthly income was $3,960. For Mark and spouse, $3,125. Their desired retirement income was $5,000. And remember, guys, you're not just thinking about this for you. You have children, nieces, nephews, moms, cousins, sisters. All right. The children, they had 3, 4, and 8. They didn't have any savings yet for the college fund. And their main interest was to increase their retirement income, reduce their debt, and get their spending under control. And of course, they wanted some college fund for their children. All right, so their total debt was $180,000. We call the real debt is when you add that interest. So a lot of people look at their debt, but they don't add the interest. You can only just look at the debt if you're gonna pay it off now. But if you're gonna be paying it monthly, you got interest adding up. Now our goal is how much of that interest can we save? Because if we can save some of that interest, we got money to grow compoundedly for your future wealth. Okay, so the faster we can pay off the debt, the more interest we can save. So the interest paid would be $199,000 over a 30-year period for them because they had 30 years to pay off their debt. But we came along and we took a look at Mark and Joyce's program and we were able to accomplish this for them. We got them free from their lenders in 7.8 years. We saved them $122,000 in interest. So that means that $122,000 that they would have paid on their bills, we got some money to invest and save and do some stuff with now. We freed up for them $2,177 a month for retirement, for us, since we're retired, right? We want to do other things for travel, for future, for leaving to our kids. So really what my goal is to help every last educator, because we're educators, right? We're going to educate our families by 3 generations from now, our family still has money from the money we left from growing for them. Or we grew money and were able to start businesses or buy homes. So then they're all like, how did she do that? How did she or he leave that for us? So that we can, and then we educate our kids and our grandkids so they'll do the same thing for generations to come. This is why I really do this, okay? So over a 30-year period, now look, Mark and Joyce won't just have a paid off house. Mark and Joyce have over $1 million they can use in their infinite banking account. Now this is not the bank like Wells Fargo or SunTrust, love those banks, right? But they don't give you enough compound interest on your money. So that you'll still use those banks for your typical, daily use. But if you want to save long-term money and pay off debt, you want to use those insurance companies' banks so that you can net 6, 7, 8, 9, and 10% interest on your money. And every time you pay off a bill or need to take money out to buy something major, you'll use their money because they're going to let your money grow. You don't understand it totally, but you get with me, set an appointment, and we'll go over this more specifically. Some of the people I partner with, so you will know who is she. She says she was an assistant principal at Lovejoy High School down there in Clayton County, but I don't know her. So here are some of the companies. This is just a few of the 40 that I work with, but I put some up here that you would know the names of the companies, right? You know Mutual of Omaha, John Hancock, AIG, National Life, Assurity, Americo, Foresters, American Amicable. I have Transamerica, Lafayette Life. Those are the companies that I work with and through. But what I do is I find a solution that works for you. And if you say, Bonnie, I'm not that healthy, I can't get insured for nothing, I always try. I got you. I can get almost everybody approved somehow. There's a way. I have a lot of guaranteed products that work well for people for mortgage protection. And then for those people who would like to participate in paying your house off early in infinite banking, if you feel that you have too many medical conditions that you probably won't get covered, that's okay. I can write this plan on one of your children, but you'll be the owner. So you control the money. I can put the plan on one of your children. But mortgage protection, I can get that on you, no matter what, unless you're literally going through, some type of major treatment at this moment, but then that's okay too, because I know when to strategically wait to get you covered. That's why I used to work for one company for 17 years and I couldn't get enough people covered. It was turning too many people down. So I knew the secret was work with 40 or 50 companies and I can get almost everybody with a plan. Okay, guys, so this is an activity for you. You can take a picture of it. The activity is for you to evaluate your financial life. Okay, if you take a picture of this, you'll have it and you can look at it when we are not together. It's for you to list the amount of income protection that you have. What amount of mortgage or rental protection do you have? What is your final expense plan? Do you have final expense coverage? What is your debt freedom plan? What is your wealth building plan? If you have children that have not gone to college yet or grandkids, what is the plan? What is your savings plan, short-term, long-term? And you don't probably have to do number 7 because you all are retired, but if you have spouses, then number 7 is their income protection plan, mortgage protection plan, or their final expense plan, only a group plan. That's when I say put by number 1, 2, and 3. Is it on the job? If it's on the job, then it doesn't usually always pay off. I've seen more payoff during COVID, unfortunately, because people did just pass away on the job. But remember, life insurance, I mean, guys, as the assistant principal, I saw several of our employees pass away and their group plan did not pay off. Nothing wrong with the group plan. They got sick for a long time and the premium wasn't paid and they didn't know. So being that who I am, I started just, wasn't my business, conflict of interest. I wasn't trying to sell a thing. I was just telling them, hey, you need to make sure your premium is being paid, because if not, you're not going to have any coverage. I saw too many people. Okay. And let's go back to, if you would like to get with me personally, these are if you do not have access to that form and you can't get that form and that's all too much for you, then you can email me or text me your name, your address, your phone number, any areas of interest you would like to talk to me about, best time and day for us to get together, your email and questions. Okay. And back to the information sheet. So now, Karen, I have a couple of minutes for questions. Okay.
You sure do.
Thank you. So guys, here is the question. Here's, again, y'all can tell the educator in me, right? Here's the question for you. So you can prepare for the questions for me, right? So first of all, while you are preparing your questions, at the end, when we close it down for questions before Karen takes it back, I would like to hear from at least 3 people. What did you learn today? And what are you going to do with it? I want to hear from at least 3 people. What did you learn today? And what are you going to do with it? Now, you can hold that for the end. That's the ticket out the door. Okay, new people that just retired, that's the ticket out the door, right? And that's the assessment. That's our reflection piece. But right now, I'll go ahead and open the door for questions. And what I'll do is, I want to take this down, so I'll leave this up through one. I'm gonna leave this up through one question, and then I want to take it down because I want to be able to see more of you. So I'll leave this information up through one question, and then I'll take it down so that I can see more of you. Karen, I can't really see everybody right now, so if you can call on people if you see a hand, or you can just unmic and ask your question.
Well, this group is usually not shy.
Ah, that means I must have done a good job.
Must have been thorough.
Yes. Now, guys, this was an informative learning. You do not have to set an appointment with me. that's the benefit and the freedom that I'm giving for you being here today. Again, to be quite honest, it's all about information to colleagues of mine. I'm so excited to be an educator talking to educators, and all of us sticking together and working together to make our lives better, right? So that's the real point of this, okay? All right, Miss Debbie. Oh, I thought Miss Debbie had her. Yes, Miss Debbie.
Yeah, Bonnie, I think the thing that you have taught me is that you are a woman that has a lot of background and a lot of information, and that these questions that I have are pretty individual, and I'm not even sure that I can articulate, in 3 minutes exactly what I want to ask. So, the thing I learned is I've got a contact, I've got a professional I can check back in with. And then also you have given me wonderful contact information. So I learned that. And it's a little bit more complicated than I thought it was. And I know that there's a lot of alternatives. And I think you spent a great deal of time trying to build scenarios. And it's like, boom.
Great.
I've got a lot of information in a very few minutes. So
very good.
As far as me asking a specific question, I don't think I haven't thought it through enough to ask that. So forgive me for that.
No.
Thank you. Thank you very much for setting me on a path for me to think about what I need to think about.
And thank you for saying that, because that is the goal. So you know how I asked all those questions at the end, like, what is your plan? What if you pass it? When I had you draw that circle, that was so that you would think about things that people don't think about until it's too late, and because we don't know what questions to ask. Okay, so thank you. All right, anybody who has for all of you who don't have a specific question, then you know what to do. Sign up for an appointment, send me your info so we can set an appointment, right? Or email me or something like that. All right, and someone else with a question.
Well, Valerie Curry put in the chat that she learned that borrowing money against her via her insurance plan. So that was her takeaway in terms of learning today. And Valerie, you have your hand up.
Okay, Valerie.
Thank you, Bonnie, and your crew for a really excellent presentation. I met with my lawyer last year to put in my will in place. And what I found, tell me if this corresponds to your company's experiences, that I can have a lot of legal things in place, but I might miss some of the financial things connected with it.
Correct.
So
that's right.
That's what I'm really learning. Is that true?
Yes, that's true. So what I tell a lot of times when I get ready to meet with people, they'll say, well, no, I already met with my lawyer and I think I have everything in place.
The will, of all of that stuff.
Right. Yeah. And I'll tell them, I say, I'm your lawyer and I will make a good team for you. You know why? Because he knows the law, but he doesn't have the financial tools and services to offer you. So he's just going to help you put in place. And lawyers tend to suggest, hey, you need to go get, hey, you need to get, hey, you might need to get, but they don't have it to give you. So therefore, that's why it's great I love it when people say I met with my lawyer, got my will in place and all of that. However, what are the tools and vehicles that you're using to achieve the goals that you and the lawyer are putting in place? So I have the vehicles and the tools for you.
And I love what you said about the teaming, because I can see from your presentation and from my work last year that, I have a special needs son. And again, it really takes, as we know, the legal and financial things together to protect your family, and of course, generational wealth, right?
Correct.
Which I've, so thank you so much.
You're welcome. So let me piggyback on what you said real quick. So this can make something clear for everyone. So if you are interested maybe in that program where we help to pay your debts and homes off early, and then you can achieve $600,000, $700,000 in cash liquidation value to use towards retirement and things like that. How a lot of people don't get that. How do you get that? The same money that you were paying your bills with. So if you add up your monthly bills, not utilities, but your monthly debts, loans, car loans, all of that, and it equals $2,000, and you were going to give away $2,000 for 30 years, to the company to pay the debt. Our goal is pay the debt off in 10 years and take 20 years to accumulate that $2,000 for yourself. Now, along the way, you might need to get a new car, right? But now you'll never have to get a new car from a finance company. Finance it. You finance it yourself. So after you pay off the debts, you take about another 5 years, accumulate some money back up, and then you'll have enough money. What else is it for you to buy? If $40,000, that'll be water. You'll have $40,000, buy finance your own car. You know what I'm saying? And then if you want a trip to Spain, get your own $15,000 out of there and finance. Oh, you want to help pay your daughter's wedding? Get your own $20,000, and then let's build some more money, because we can buy a house and set it up and resell it or rent it out and put some more money in there. So the goal is to free money to do things for yourself. Okay. All right. Looks like we have, I say, 1 more minute for questioning, and then we'll have a few minutes to make sure we got some things that people learned and what they're going to do with it. Okay. Do we have another question or two?
I have a question, Bonnie. Laquita Brown.
Okay, Laquita.
I've only been in education like 22 years. I'll be 60 next week. I wanted to retire in the next couple of years. Would you be able to help me build my money? Or would you suggest that I continue working for that 30, but aim for 30 years? And I do have additional, my husband passed like 4 years ago. So the money that was going towards his insurance, I had that to go on into AIG or whatever, instead of coming to so I did, invest more into that. But I do want to be financial. I don't own a home. I'm renting at the moment. So, and my kids are grown, married, have their own. So what would you suggest for me?
I suggest, one, that you definitely set up an appointment with me, because I heard a lot of wonderful things that you would be able to possibly do to help get you out of working sooner than you probably thought you would have to. Okay. I saw a lot, for example, I'd have, and we kind of know about them through 403Bs that we did when we were working, but I have some annuity products that it sounds like you probably have some funds that we can move to better vehicles. And so if we can take some funds and put them in an annuity, fixed, not anything that's not guaranteed annuities, that we can build another income for you. So we can save probably for another 6-7 years, and then annuitize that money, and then that'll be more money to pay you monthly, just like your retirement from here. And just like those 403Bs did when those individuals came to the school and set us up. So yeah, you need to talk to me. I love you said a lot of things that I know we can do some things to help build some more money for you for retirement.
Okay, thank you so much.
Bonnie, thank you so much. I need a few 120 seconds to
Yes, ma'am. I'm sorry. I apologize.
No, don't. I've already had someone suggest in the chat that they would like to see receive the video of this presentation. Could some other people give me some thumbs up or some nods if you would like to okay. So I'll just send that out to the entire group who, thank you, have joined us today. I do want to share 2 other GAE-Retired announcements. First off, we do have the virtual lunch bunch first Wednesdays of every month, and we have our speakers set up for next month, talking about memory. So now that we know what we are doing with our money, we need to be able to remember that we know what we're doing with our money. So please join us on March 2nd, beginning at 11:30. And then next Tuesday, we are having the GAE-Retired Day at the Capitol. And this will be virtual just because of COVID. We're not working the ropes. We're not allowed in the galleries. I'll put the link in a minute in the chat, or you can see here, it's just tiny URL/Rapid Response Team 0208 for the date. So please register for this. We have a great lineup of speakers. We'll be talking with some legislators, bringing greetings, talking about state issues, talking about national issues. So it is exactly 12:30. I thank you for joining the lunch bunch today. Thank you for being GAE or GA. I'll try this again, GAE or GAE retired member. And I hope you'll join us for upcoming events, and stay warm, stay safe, and we will gather again. Bonnie, thank you. It was excellent. Y'all have a great day.
Thank you. And thank you all for having me.
Thank you.
I'm looking at these chat notes real fast before you shut it down.
Contact number or website one more time.
Okay. If do I have time to show it real quick?
Sure.
There you go.
Got it, Cyril?
Mm-hmm.
Bonnie, thank you. I'll be back in touch. It was excellent.
Oh, thank you so very much. I'm glad you thought so. I was trying to see if there was, I saw somebody gave me their number in the chat. Okay, I think I got it. Who was that? Is there a name on that?
It must have been a private message to you, because I did not see that come through.
I mean, can I take a picture real fast before you
Sure.
shut it down?
Sure.
Okay, thanks so much.
I don't know what we did before technology.
I know, isn't that something?
Bonnie, that was
Valerie.
me. That was
Okay.
me. I left
Oh,
you that.
okay.
Yeah.
I
But I'm
got you.
sending you an email right now.
Okay, thank you so very much. Y'all
Thank
have a great
you.
day.
You too.
Thank
Bye.
you. Thank you for having me, Karen.
You're welcome. Y'all be safe.
Uh-huh,
Bye-bye.
bye-bye.